Okay, well, welcome back to the New Zealand Property Podcast and Video Series, kindly sponsored by our Property Ventures team, or Harcourts Property Ventures team here at Alexandra Park. And we got a very important guest today, Jarrod Kerr, the Chief Economist from Kiwibank. G'day, Jarrod.
Yeah, g'day.
And Jarrod's been a regular guest, like a couple of others just recently, been there for a pass, but not for 2 years. And geez, a hell of a lot's happened in the last 2 years, Jarrod.
Yeah, has it what? We've seen a huge amounts of volatility in the housing market. It's been quite exceptional.
Yeah, in fact, before we start, I was just kicking two podcasts ago. We had Chris Peterson on, and he was raving about this guy Jarrod Kerr because out of all the economists of all the banks, he was the one earlier in the year picking how interest rates would happen and exactly sort of how it happened. And he basically said, "You're the man." So there you go.
I'll take that. Thank you very much, Chris.
Yeah. So I guess it was over 2 years since we've last done a podcast, and I guess at 2 years ago, I remember it vividly for the wrong reasons. The triple CFA rules come in and
Yeah.
stop people borrowing money. I don't know. It's just that's a good starting point for today. But yeah. So what happened there? And it's interesting enough now. Obviously, we've seen a lot more buyers back in the property market now, even though the interest rates have moved from sort of 2.5%, 3% to 7%, 8%. But at least people can get finance.
Yeah, no, that's right. I mean, if we think back a couple of years, the housing market was really on a tear. It had increased, 47% in 18 months. It was just extraordinary. For a
Unhealthy.
variety of reasons, we came out of COVID, interest rates were low. There was a number of accelerants there. But then it became political. It became very political to have a crack at housing and have a crack at investors in particular. And we saw not only interest rates start to rise, which was the big shift, but then we saw interest deductibility being phased out. As you mentioned, the triple CFA was coming through, which sort of scared banks a little bit and sort of tightened us up a bit. And then the bright line test was extended as well. So these things all weighed on investors. They were designed to make sure there was no speculation in the market, and there wasn't. In my opinion, there wasn't a lot of speculation, and I think the focus on investors was misplaced. But here we are, a couple of years later, and we've gone through a correction in housing for previous excesses. House prices have fallen, 17% peak to trough. So, and that takes us back a little while. But prices are still today above where they were in 2021. So we're still kind of moving up, just in quite a volatile fashion. And I think now the focus is off investors, and the incoming government has hinted strongly or promised that they'll take a look at interest deductibility again. The bright line test will be shortened right up to 2 years, and they may even water down the triple CFA a little bit. So I think that'll re-engage investors, and that's precisely what we need to do. I think investors are part of the solution, not the problem.
Mm. Yeah, I just think the last government never saw that and realised that. But at the end of the day, as you said, we probably where the property market should be going for its normal, stable, 6, 7% a year sort of thing. As I said, it's just gone so volatile. It was such an unhealthy market 2 years ago,
Yeah.
and it couldn't stay like that for very much longer, and it didn't. And I guess it seems to be the sign of the times the last 10 or 15 years. Instead of going like that, it just goes like that, but it still has that the over bearing thing. But and it's interesting this time because there's different parts of the market have really gone. That 17% you're talking about from the highs to the lows. That's
Mm.
purely the average, and we've seen very close at hand which ones have gone down more than that, and which ones
Yeah.
obviously haven't gone with that. But so I guess one of the really interesting things, obviously, the last or topical in the last month has been the election, and obviously the new combined three parties of more in favour of property investors. I realise the importance of them. And I remember during COVID, one of the biggest problems I saw in New Zealand society over the next 5 years, as all these problems were going against property investors, making it harder and harder and harder, is it had to happen. There's going to be nowhere left for the tenants to live, and where are they going to live? And that's where I saw the major problem, and we've seen that in everywhere, not only Rotorua but Auckland and other places as well. And hopefully now the new rules that'll be alleviated a little bit. But first of all, can the three parties in government work well together?
Uh, uh, I hope so. We kind of need them to. Just as we needed Labor to do well, we need National and the coalition to do well as well. I'm personally sort of sick of these 3-year cycles. We need longer term objectives. We need longer term thinking. We need some big changes if we're to sort out our housing market. It's an embarrassment, really, if we actually step back and look at it and see the population growth that we've seen over the last few decades and the amount of infrastructure that we've built, the amount of property that we've made available, plots of land or becoming, denser. It just hasn't been enough. We haven't supplied enough to keep up with our demand, and that's a real problem. Everything that's wrong with New Zealand's housing market is on the supply side. We just simply can't seem to build enough. We had a good crack at it in the last couple of years. We've produced quite a few thousand homes, but still not enough, unfortunately. So I'm all for anything that boosts, our infrastructure, that unlocks, more land for building or becomes denser in existing areas, because we simply need to increase supply. That's our big problem. But policymakers, politicians, it's too easy to focus on the demand and investors, and that's the wrong approach.
No, exactly right. I mean, other cities have massive populations compared with what Auckland has, and in such a small area, and it works, and it seems to work well. And I agree, that's what they've got to concentrate on more, more than picking on one set of group of really important New Zealanders to keep people in housing, sort of thing. So so let's hope these guys can do it. Maybe the coalition partners will actually keep. I think actually they will keep National more honest with what they're doing and keep them on the game quicker, which we probably need to happen, sort of thing. So we'll give them their 90 days and see what they can achieve, mate, and that'll be good. But I guess what it has done, it's given property investors and home buyers a bit more confidence and certainty. I think certainty is the word. That's what I think both home buyers and investors haven't had the last couple of years. And that's why I think we see more buyers come back now. There's going to be an influx of properties on the market in January, February, what we're seeing. But I think there's also going to be an influx of buyers come back. So what I can see is, and I don't really know, I'm talking for fairly layman terms, what I see day to day. I see the demand and buyers both going up drastically together. Now, how long, which ones dies first, I have no idea. That's you're paid more money than me to work that stuff out. But I don't know how you feel that for the next sort of 6 or 12 months. With I see a lot more transactions happening, but I don't see the price going up because of that both terribly much. I think it will gradually go up a little bit. It has to a smidgen, I guess. But I just see a lot of transactions happening, and I don't know what she's going to give away first.
Yeah, no, I agree. I mean, it's very easy for me to sit back and go, look, this is a classic example of buying and holding through, cycles. It's very easy to sit back and say that. It's very difficult for some people in practice, right? So, I speak to, very large developers, small builders, the whole lot. And when house prices are falling, it's very hard for them to make money, building property, and it's, very hard for them to sometimes hold on through the cycle like this. So, we have seen A lot of movement. I think now you're right. I think sellers probably a little more realistic in their expectations. So maybe they've come down just a fraction, but buyers are starting to step up. We're seeing it as a bank. We're seeing it through our brokers, our mortgage brokers. They're telling us there's a lot more activity. There's a lot more confidence in buying a place now. So as they move closer together, you get more transactions done, and
Mm,
that is what we're seeing. And to me, that's the turning point. So I think the official data will show. I think the bottom of the housing market was about May of this
yeah,
year,
yeah,
round about there, and we've
I'd
had a
say that
few months of some small increases, as you say, and I
hmm
think we'll have a year of small increases next year. And I think by the end of next year, house prices on our guesstimates will be 5-7% higher, which is a lot more palatable for all
mm,
concerned.
yeah.
And it just fuels that confidence. It'll bring that confidence back into the market, which is important. And then we'll see, I think activity just continuing to pick up
Mm.
next year as that confidence is reinforced.
Mm. No, that's great. That's good. Nice to think that I'm on the same wavelength as a chief economist. That's pretty good for me because that 5 or 6 or so% is about sort of where I see it. And in recent years when I used to trade property and renovate and what have you, I used to this is my sort of market. I love this sort of market, and it's because you can still at the moment as more stock comes on, you can still buy well, but if you have a really nice property, it's going to sell well also. So there's something in it for everyone. And if you actually it's a real true property prices, and if you do renovate a property, you will get the benefit out of it. Whether it's going down and all over the place, you don't really know. So you can buy a property, renovate it, and whether you're a homeowner for the future or a renovator trader, you are going to get that benefit out of it. I think so. That's really good. But some at the moment, some standalone homes in good areas or okay areas, even average areas of Auckland, but standalone, nice homes. They're the ones that are actually going higher than what people's expectations are at the moment. A lot of others, though, unfortunately, and some of those vendors think it's going to go higher, are still struggling to sell. But we see actually is anything that's a little bit different, even cross lease or body corp at the moment, they just seem to be they're selling, but they're just taking a little bit longer to sell or anything with
Right.
this issue where the other standalones are quite easy to sell and getting great prices. So
Yeah.
yeah,
I guess people understand them better, right? Like a standard sort of standalone place is a lot easier
yeah.
rather than having to deal with stratas and whatever. Yeah.
And I guess we just had it so good up to 2 years ago where it didn't matter what you had, and new builds were selling with incredibly high prices, and I think they're the ones that have taken the biggest hits of what I've seen.
Yeah.
So it's probably just back to normality now of what it is, what normal real estate's like. So that's good to hear that Kiwibank do think that the markets is going to slightly go up, a little bit more, which is nice. I guess we're hearing a lot of still. There's a lot of the cost of living and a lot of bad news on the news every night if you bother to watch it like you will. Um, and I guess so. Just because the property market looks as though in the next 12 months it's going to go well. What's that mean about the rest of the New Zealand economy? Is that going to go well, or is it going to be delayed a wee bit, or what's your take on that?
Look, so much rests on the property market, in countries like New Zealand, Australia, and others. So the fact that we think house prices are more likely to rise next year than fall is quite a big foundation for where we think the economy is going to go. It obviously feeds into small to medium-sized business confidence as well, like directly through those owners, and also households. Our households who own a home, become a little bit more confident when their housing value is going up rather than down. So that's a big foundational support that we think will be needed next year. And ultimately, we're kind of hoping that enough has been done There is a lot of pain, as you mentioned, cost of living crisis, particularly lower income households, paying a lot more on essentials, getting a lot less for their money, struggling. And then there's this kind of squeezed middle where if you've just taken on a mortgage, or you have a mortgage, you've just been hit very hard with quite a sharp increase in interest rates. We're kind of hoping that that'll play out, and the next move from the central bank will be a rate cut later next year. If that happens, then again that means we've had a soft landing. It means that inflation's gone back to 2%, which is good, and it means that interest rates will start heading south, which will provide some relief to homeowners and investors.
And I was going to leave that to right to the last minute, but I'll just ask that now, seeing you brought it up with the interest rates, and I've got my sort of opinion and what have you. But if you're borrowing money now, your term comes up, what would be your advice? And it's a generic thing, and obviously everyone's in different situations. But what would you say to someone who says, Jarrod, do I fix for 5 years? Do I do it for 6 months? Leave it floating? What do I do?
Yeah, I like telling people at any point in the cycle to chop stuff up, chop it up. I think too many people just go into a bank and say, well, here's 100% of my mortgage. I'll fix it for 1 year. They don't ask the question, should I split this up, spread the risk a little bit? And I think 2021 was a classic example of, I went to my bank, I split it up into 5 or 6 portions, and some for as long as 5 year, 4 year, 3 year. So I've got something rolling off each year, and I'm really glad I sort of locked in some mortgage rates, that don't come off until 2026. That's good. But it also can work against you. I think, when I moved here in 2018, I did the same thing, and that 5-year rate that I took out at that time was quite high. So, you win and you lose over the cycle, but I quite like having it spread out and being more, I guess, insulated to rising rates than falling rates.
Yeah, no, that's a great bit of advice. I've always liked splitting loans myself in the past for those sort of reasons. I guess now, if you are looking though, and as you said, I guess all things equal, it looks like later next year the interest rates might come down a smidgen. So I guess again, don't chuck it all there, because you never know what's going to happen tomorrow, especially with the governments these days. And the market's more affected by the governments now than it's ever been in history, sort of thing. But I guess if a 1-year rate's not a bad option at the moment, for the fact that if it does go down a smidgen, that's great. You've still got more options than it's going down. I guess it might be lower in a year than it is now. But as you said, I guess splitting the loans is definitely the way to do it. And it's just, I guess if you're doing like you're doing 1, 2, 3, 4, 5, you're leveling out the playing field, and you're staying what the average is all the time, which you can't really go wrong if you're doing that.
Yeah, exactly right. I mean, if I'm to say what I'm thinking interest rates will do, there is a chance the Reserve Bank hikes again. I disagree, but that they've said they might do it. So we might see, mortgage rates lift up another 20, 30 basis points in the near term. But then I think if we're having this chat this time next year, interest rates, would have fallen and look like they're continuing to fall into 2025 and beyond. So we've just got to get past this hump we're going through now. It's the central bank trying to get inflation back to 2. It's currently 5.6, so they've got a wee way to go. But I'm reasonably confident that in a year's time rates will be lower than where they are today.
No, that's good news and good to hear, and hopefully they certainly will be, because and it's been so much heard. Obviously, you've seen it. With those people from 3%, they bought their home at the height of the market. It's now worth 100 or 200k less, and all of a sudden they're now paying 8% mortgage. It's been pretty tough, and obviously some of those are the stories. Bad things happen to good people sometimes, and unfortunately it's happened, and they're selling and bailing out, sort of thing. And we've been on the other end. We've had to say, when did you buy your property? In December 2 years ago. Okay, how much are you prepared to lose? We're not being a dick about it. We just that's the truth of it, sort of thing. So we the good thing is, it's held out a wee bit. The longer they held out now, the better they can do. But I think the 2 year rule that's about to change, hopefully, the bright line rules will make a massive difference, I think, for some investors. But even that's been a bit of maybe you talking, not me, but that's been a horror story. For I remember 2 years ago we had about three people all at the same time. Investors were going to list, and we say go and talk to your accountant. They talk to the accountant. They say, you're going to be affected by the bright line rules. Hold on for a year, and then they held
Oh
on for a
no,
year.
yeah,
They lost 12 or 13%. They might as well sold then. So now they hit twice. So that's been a bit of a bad news for a lot of people. So but yeah, just hang in there, sell, buy something else in the same market, and and see what happens, sort of thing, I guess.
yeah. If you're in that position, obviously try and hold on for as long as you can.
Yeah.
If we're right and prices stabilize and start rising next year, then you'll be in a better market this time next year. You would hope.
Mm. Yeah, and we talk to people every day, and a lot of people doing that. And even though we want transactions, we can see that's the best thing for them.
Yeah,
And yeah, that's good. They're doing well. In other cases, if they're on the borderline, and if they've got a house that's sitting in the market now with a lot of buyers, it's actually not that bad, because, as I said, we are seeing places sell 100,000 plus more than a reserve at times. But if you're
yeah.
if you're a vendor watching this, don't think it's going to happen with your property time in the next 12 months, but occasionally it does happen at the moment.
Yeah, yeah, yeah. It's quite a mixed market out there too, right? There's Auckland, which is its own beast, and very much leads the New Zealand market. So Auckland, we think is sort of bouncing back a little harder and faster, and a lot of that's due to this migration boom that we've had. Nearly 130,000 net migrants coming in. So 200 have come and a few have left, but that's a big number. That's a lot
Mm,
of people, and 90 odd percent of them land in Auckland. Some
mm,
of them head out elsewhere, but most of them land in Auckland, and this is their Kiwi experience. So, it really hits our Auckland market more than anywhere else.
mm. What about, we've seen a lot of people in the last 12 months get sick of New Zealand politics, and where New Zealand's heading, and it's not such a safe place to live anymore, and have gone overseas, and a lot have gone to Australia. It's like 30, 40 years ago, everyone went over to Australia. What's your feeling about that? Do you think some of them will come back? And what's your take, or Kiwibank's take on that, if they've got one?
Yeah, no, it's a good call out, and the amount of Kiwis leaving is still increasing. So that hasn't actually tapered off. It's actually, I think we recorded 70,000, uh, you know, New Zealand citizens left in the last year.
Right.
That's a lot. That's a
Mm,
hell of a lot.
yeah.
20 odd thousand came back, but I think I
Mm,
think we're like a net 50 loss. And that does change over time, and it seems to change around opportunities. So when Australia is doing really well and got great job opportunities, or the UK, we see more Kiwis taking flight.
mm,
Um, you know, many people just get paid more in Australia or the UK, and off they go. We do see that hopefully tapering off next year, but it is a big outflow at the moment. We
mm,
generally have an outflow, um, and a lot of Kiwis like myself will leave in their 20s and come back in their 40s.
yeah.
I think I'm a classic example of that. You spend nearly 20 years overseas, but you come back because you want your children to be Kiwis, right, and go through Kiwi schooling. That was a big decision for my wife and I think a lot of those people will end up coming back.
Mm,
But we do lose people every year, and we lose them to places like Australia, and you sort of wonder why, but you know these places are quite often better run.
mm,
And I lived in Sydney for a long time, much better city than Auckland. I went without a car for 6 years in
mm,
Sydney. The only reason I got a car is because I wanted to drive outside of Sydney, basically.
Yeah.
You've always got a train. There's a ferry in some places, and you always have a bus, no matter where you are.
Mm.
Whereas in Auckland, you're lucky if you have
Yeah,
a bus.
I think that's what's wrong with, we said before, they've been focusing on the wrong things, but infrastructure in Auckland is just, I'm not a, Aucklander up on the South Island, and they've been
Yeah,
here for the best part of off and on for 20 or 30 years, sort of, been doing a lot of certainly the last 10 years, but infrastructure is what has let the city down. There's been no forward thinking of what it needs to have that growth right in the middle of the city. And
yeah,
yeah, right, places like Sydney and stuff are, head over heels better in those sort of avenues.
yeah.
I guess some of those flows of people back out have maybe exaggerated a bit by the COVID, because obviously over COVID, a lot of New Zealanders come back that hadn't been here for a while. So maybe some of them going away again, or
Yeah, but it's persisted longer than we thought. So we thought that was the case for like the first 6 months of this year. That would make sense.
yeah.
But the fact that it's continued for the whole year and it's actually gotten worse, so to speak, more Kiwis leaving, suggests to us that it's more than just, a bit of payback for those COVID years.
Mm,
But you're right, the COVID years, we saw a spike of Kiwis coming home as COVID hit. They thought, if there's anywhere in the world I want to be during COVID, it's New Zealand. And, they came back.
mm,
And that was great. But, they have taken flight again. But it's persisted for a lot longer. So it's more than just that. I think
yeah.
this is people, actually looking to Australia and better opportunities
Mhm.
offshore.
Yeah, we've had a few, I mean, enough that it is unusual. People who have immigrants, will say, from around all different parts of the world over have been in New Zealand 10 to 20 years, and they're actually packing up because they're just not happy with where the way New Zealand's gone in the last wee while, I suppose. So certainly whatever government's in there at the moment, we need them to make a difference so that doesn't happen. I guess moving
Yeah.
forward, that's for sure.
What
Um,
what what frustrates me is that we don't actually have to invent anything. We don't have to invent the wheel here. Like all of the solutions to Auckland and New Zealand's problems, you just look overseas. How
mm,
has Sydney done it? Oh, okay, they build a railway line, and then on top of the railway stations, they build cities. Oh, right. Does that work? Hell yes, it works.
mm,
Look at Parramatta, look at Chatswood, look at these hubs that they've got throughout Sydney. And people do like living in higher density dwellings, apartments or townhouses, particularly the people that we're importing. We're bringing in people from China, India, South Africa, Philippines. They're coming from much higher density backgrounds,
mm,
and they would love to live in these sorts of little cities that they've got within Sydney. We
mm.
need to do that here. We don't have to reinvent anything. We just have to copy.
Mm. Yeah, my daughter lives in Coogee Beach in
Oh
Sydney,
yeah,
and well, I mean, it's just such a cool wee place. She's been there a year and a half, and it's last thing she needs is a car, because it's the trains and the bus right outside where she lives. She's a 2 minute walk to the beach, and she can go to all the local suburbs by bus straight into get the main train intersection and place in town. It's only a 15-minute ride, and then into the
yeah,
city sort of thing. It's just so easy to get around here when you're there. And I remember someone coming from the States probably 5 or 7 or 8 years ago, and they were talking about Auckland had to be exactly what you just spoke about having the wee hubs and where you live. You live and work where you are, sort of thing.
yeah,
And I guess it's sort of a foreign thing for New Zealanders to understand and do and get. But
yeah,
that's what, as I said, we're not inventing the wheel. That's what other cities do, and it works well. And
yeah,
just like now, working with a developer in Eden Terrace here in Auckland, and obviously it's right on the verge of wants to be in the city and what have you, but they're building apartments, they're building shops and centres to try to make that just be a hub. And it's a 5 minute
yeah.
train when the trains go through there, 5 minutes to the city. Anyway you want to go, it's not that far, and that's, I think, what will make people happier in a place like Auckland, I think.
Yeah, absolutely. It's proven to work overseas. I also lived in Singapore, right, which has got a much higher density
Mm,
number of people per square foot or whatever, and they just build these great big apartments. I lived in one, loved it, had a pool, had a gym, all the sort of stuff that I wouldn't have otherwise.
mm.
Nothing wrong with it at all.
No, definitely. That's what we're doing here at Alexandra Park, or AMC.
Yeah.
The developers come and do what they're going to be doing here, so it'll be the same sort of thing. Um, just not really here to talk about cost of living, but cost of living. Did you see the end of the crisis, especially low? Well, not say low and middle class New Zealanders. Everyone is struggling with that.
Yeah, no, it has been a problem. So, part of the medicine that we've had to take over the last couple of years has been the central bank hiking interest rates to slow everything down, including the property market, but just to slow everything down and try and reduce that price pressure. And a lot of it was coming out of the labour market. So businesses this time last year were absolutely screaming for workers, just couldn't find people. You heard stories, throughout the country, not just in tourism, not just in construction, like just about every industry was screaming out for workers. Now we've had this migrant boom. We've actually seen, quite an increase in workers, which is good. A lot of
Mm.
tradies coming here, which is good.
Yep.
So the cost of building, I think, will ease off. We've already seen signs of it, but I think it'll continue
Signs of that.
to ease off. Materials costs will start coming down, labor costs will start coming down, or at least not rising as much. So all of that is kind of feeding into a slow economy, but a reduction in costs, which is key. So that cost of living crisis, I think, will start to reverse next year, where incomes have been rising, and inflation will fall below income growth, and that's kind of what we need to get out of this, right? So people's incomes rising more than inflation. I think we'll see that next year. So again, this time next year, I think will be a bit better balance. That cost of living crisis will have reversed somewhat.
Mm.
And it needs to. I mean, as you say, there are poor households, there are middle income households, and even higher income households. We're all complaining about the same thing. The cost of a coffee used to be $3, I remember, and now it's like getting up above 5, 6, 7 in some places. So
That's why you got to make
it's
your own, mate.
outrageous.
Got to
Yeah,
make your
exactly.
own. All good. Well, that's great to hear that Kiwibank think that sort of thing and where we're heading, because that's one of the probably major crises obviously for most New Zealanders right now. So let's hope you're right with that, and you heard it here at the New Zealand Property
Yeah,
Podcast with
exactly
Jarrod
right.
Kerr. So just to sort of finish up, what major other issues do you see maybe affecting New Zealand as a whole that we haven't sort of already spoke about it, if anything, moving forward the next 12 months?
Did you say major risks?
Or major,
Yeah,
just major issues or risks or
issues. Yeah,
yeah.
I always worry about what's going on overseas.
Mm.
There's just so many moving parts. There's geopolitical risks. Obviously, we've a couple of shocking wars out there at the moment. I would hate that to come into our backyard.
Mm.
There's risks of us having to face our largest trading partner in a very awkward fashion. I sort of don't want that to happen, but it's a risk. Global growth more broadly could come out a lot weaker. Our trading partners, you think of China, that they're going through quite a slowdown. Their property market's imploded. The consumption, everything in China is a lot weaker. And we can see that through our tourist numbers. Aussies have bounced back, Europeans have bounced back, Americans, Chinese, only a very small blip. So, we kind of need the Chinese to come back. But if their economy, gets worse, that's a big drag on us and Australia. So I think I'm more worried about what's going on offshore as a risk. I think the known unknowns are kind of here in NZ, and we can work our way through a lot of them. But those kind of unknowns offshore sort of worry me more.
Mm. Does our economy, I might be totally wrong with this, but is our economy stronger than it used to be 10 or 20 years ago with those sorts of risks you're talking about? It just sometimes seems to hold itself not too bad. But I guess it depends what that risk is and what actually happens, I suppose.
Yeah, I mean the risks are there, and they've presented themselves quite a few times in our history, and every time we see that sort of offshore disruption or offshore recessions or financial market blow-ups, those sorts of things, they hit us really hard and out of the blue. So I guess I've always just got an eye on what's going on overseas for the broader picture. They are pretty big risks. I think most countries and central banks are kind of working to get inflation down, but then they're also starting to look at lowering interest rates. So hopefully that is the path we get next year.
Yeah, oh, that's great. Okay, well, any words of wisdom or something from Kiwibank can tell the world that that no one else knows, or Jarrod Kerr knows that no one else knows before we finish up.
uh, no, I wish you'd asked me before. It normally takes more than 30 seconds for me to come up with something clever. So yeah, I got nothing.
And just for the listeners, this is actually recorded today on the 12th of December. It's probably not going to be released till between Christmas and New Year. I think I read in a report you had the other day, there's a few big things coming up for Economist to get excited about the next few days. What's that about?
Yeah, so we got GDP out tomorrow, which is always fun to look at. It tells us where we've been in a very, very late fashion. It's old data, but even economists still get excited about it. The next big data point for us is inflation, and later in January, and hopefully it's falling in a way that relaxes the RBNZ a little bit. And then of course we've got the mini budget from the government next week. It'll be interesting to see how the Treasury numbers have evolved. I think we'll find that the government's in a weaker position from a revenue perspective, but also what they're trying to do on costs. So it'll take I think, a very stern government and very forceful government to try and reduce spending where they need it, and but also make New Zealand put us on a better path, I think, with more infrastructure spending.
Yeah, great stuff. Oh, hey, Jarrod, hey, thanks very much again. I mean, you're a busy man and you always accommodate. Whenever I ask you, you're always here. And I thank you for that because I've loved it the first time I heard you speak, and you seem to be right on the button with things. I know it's your job to do that, but but thanks to you and Kiwibank make yourself available for me and our listeners today.
No, appreciate it, and always enjoy coming on and doing chats like these.
No, great stuff. So have a great Christmas and New Year, and all the listeners and watchers of this sort of show. I hope you're enjoying your Christmas and having a good break in New Year's and taking time out to educate yourself and relax and plan next year's activities. And have a good break, and we'll see you on the first podcast and video series next year. So enjoy your break.